Hey there, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. It is Thursday, August 13th, and you're tuned into Next Level Charting. Thanks very much for joining us. So I've got some different stocks I want to take a look at. We got some staple stocks that are looking strong. We got some healthcare with some pullbacks, and we've also got some hard throwbacks to support I want to look at. So I'm going to start off with a number of consumer staples stocks that I think are showing strong patterns, bullish patterns, and some upside leadership, and some of them could be poised to move higher. Now, this first stock is AutoZone, and if you look up the sector, you go to the sector SPDRs, you'll see that it's part of XLY, which is the consumer discretionary sector. But in reality, I think AutoZone is more of a consumer staple stock because let's face it, when your car breaks down, you need an auto part, you go to AutoZone and you get it. You don't go there for discretionary spending. I mean, maybe you'll buy some new wheels if you have some discretionary spending, but I think for the most part, AutoZone is a consumer staple because you buy something there because you need it. Your battery goes out, you go to AutoZone to get a new battery. So if you look at this chart here, I think it's got a bullish configuration. Now on these charts, I'm showing the 5-day moving average of RSI, which is the green line there. And that's my kind of trend indicator. And you can barely see it, but it moved above 51 there. And it stays bullish until it moves below 49. And if you look on this price chart, AutoZone had this consolidation. That's a consolidation in an uptrend. So it moved above the 200-day. It consolidated. It broke out. You got this little throwback here, kind of the breakout zone. So that breakout zone turns support, and it looks like it is poised to bounce off support here. Now, the next one is a true consumer staple stock. That would be Clorox because demand for Clorox has skyrocketed with COVID. And if you look at Clorox, it's clearly in an uptrend. There's the volatility in March, and then just a steady uptrend. And you had these pullbacks along the way, and after each pullback, you moved to new highs. And what's got me interested in Clorox is this big move down, because that moved RSI into the 40 to 50 zone. And you can see here, I drew the red line there on that 40 to 50 zone. And so RSI bounced off that zone in April. It bounced off that zone in late May, in early June, and here we are again. And we're oversold. Well, it's mildly oversold. If you want to see oversold, you probably have to use 10 or 5 period RSI. But when 14 period RSI gets into that 40 to 50 zone, I think it's mildly oversold. And this consumer staple could be poised to continue higher. The next stock is Dollar Tree. Now, I will note that these stocks aren't reporting earnings except for Dollar Tree reports on August 20th, and I think Walmart is coming up and it reports, but the rest of them have already reported. But, look at this bullish setup in Dollar Tree. You have the big surge and the breakout, and then we have a consolidation around the 200-day, and we're breaking out of that consolidation. So this is a bullish continuation pattern, and you're breaking out. And then you can see RSI bouncing off that 40 to 50 zone in late July. Your mean reversion opportunity is when you get RSI in the 40 to 50 zone, and your breakout opportunity is now. Then we look at Hershey. So you're sitting at home, you got lockdown 2.0 going on, and you're a bit bored. Well, what do? Well, you eat chocolate, of course. I mean, that makes sense. So here you can see Hershey had the big surge in March and then the long falling wedge. So this is a long drawn out correction. And then we get a break above the 200-day and we're consolidating above the 200-day. I think this is a bullish consolidation. So it's kind of like a flag or a pennant. So you surge, you correct back, and you're breaking out. So Hershey, it looks like people want to eat more chocolate. And this could be also anticipation for a winter lockdown when we're all gorging on chocolate. And of course, if you're gorging on chocolate, you need something to wash it down. So why not a Pepsi? So here is PepsiCo. And again, we can see the surge in March, a corrective pattern, and a breakout above the 200-day. And now we've got this little consolidation above the 200-day, and it looks like we're turning up. So Pepsi is a little slow to turn the corner here, but I think the cup is half full of Pepsi, definitely, not Coke here for this stock. And then if we look at Walmart, and Walmart does report on the 18th, so you got to be a little careful here. But, same situation, surge, a correction, and there you can see that big move up in the breakout. And then after this other surge, we have another correction, and it looks like we're breaking out of that correction now. So it looks like Walmart is also poised to move higher. So I've got 3 healthcare stocks I want to point out because they have pulled back within their uptrends. And the first one is AbbVie, and this is the pharmaceutical stock. Look at this steady uptrend and big move up. And you finally got a correction there in July into early August. And it probably retraces around a quarter, maybe less, of that advance. But it looks, something like a falling flag or channel, if you will. And you can see we're breaking out, holding above the rising 200-day moving average. So AbbVie is looking very constructive here. And then if we look at Amgen, a similar situation, you're above the rising 200-day. You hit a new high there in July. So we had the initial surge, and then you can see this corrective wedge back to the 200-day. So you break above the 200-day, you come back to the 200-day. You can see the resistance zone there. So this is a classic pullback to a breakout zone, and then you break out again. And so now we've got another breakout zone, and you can see this consolidation in the rising 200-day. So we're holding above support here. And we really can't draw a nice, wedge here. It kind of looks awkward, so I wouldn't draw it here. But it looks like a pullback. And look at that big move up today. So we could be poised in that pullback in Amgen. And then the other one is Edwards LifeSciences. And these are the ones that sell picks and shovels to the biotech industry, basically. And again, you got that initial surge. You have a pullback. It looked like we were breaking out here, but fell back. And that's really frustrating. And, this kind of stuff is going to happen. If you're drawing your lines, you see, oh man, there is a really nice triangle within an uptrend. We're breaking out, and then boom, it fails. Okay, so back to the drawing board. Let it cool off. Wait to the next setup. And then you can see we get a breakout there. We get another breakout. We break above the 200-day, so we've got a nice surge. And then you've got a nice flag or a wedge. So a surge, a little flag wedge, and we're breaking out. So Edwards LifeSciences is looking constructive here. So what do we have here at trendinvestorpro.com? Well, I'm concentrating mostly on ETFs and broad market timing. And the way I do that is with a report every Thursday, and that's a ranking and grouping report. And I don't group my ETFs by index, sector, industry group. Sure, I look at them that way in general, but when I'm grouping things, I group them by chart patterns. And that's what this report does. I've got 50-some ETFs there, and I've got them grouped by chart pattern. If they're overbought, they're together. If they're breaking out of consolidations, they're together. If they're lagging, they're together. I've also got some market timing models using market breadth. And last week we were looking at falling volatility, how it's powering SPY, and what to watch going forward. And also I've got a weekend video that pretty much wraps it all up for you on Saturdays. So before we look at this next group, I just want to give a little peek at the plugin from trendinvestorpro.com here on the StockCharts ACP. So here I am charting F5 networks, which I'm going to show on a sharp chart here in a minute. And one indicator in this plugin is what I call RSI trend range. And that's based on the concept that RSI, when something is trending, RSI is typically in a range. And in this case, the range would be, say, from 49 to 65. And in the bear range, if it's trending up, it'll be 49 to 65. And if it was a bear range, it'd be, say, 51 to 35 roughly. And so what I've done is I've created this indicator. It's 65-day RSI with a 5-period smoothing. And there you can see the lines there. You're going to get some whipsaws. You need to use it in conjunction with other indicators here. But what I'm noticing is we got this big move up above 51 in that 5-period SMA of 65-day RSI. So that's bullish. And now we're dipped back into that zone. And this zone sometimes alerts you to a potential reversal area. You can see here we reversed in that zone in early 2019 and here in June. So now we've broken out, we've pulled back to this zone, and looking at F5, if we get another upturn, that would be bullish. So now let's look at it on the sharp chart. So in addition to that concept I showed you with RSI, the 5-day moving average of 65-day RSI, which is on the chart, you can see it's in that 49 to 51 zone, which can be a zone that marks a potential turn, could be an upturn or a downturn. Because we're above the 200-day, and because this indicator is on a bullish signal, I would be more inclined to expect an upturn. And if you look at F5, there's a lot of support there in that 130, 135 area. Some lows there in May, June, July, and August. The rising 200-day is also there. And so it looked like we had a breakout. So you had this nice consolidation. Everything's looking fine. And then boom, that's probably earnings. But we're at support. And so this is like a hard throwback to support. And so now we're firming at support. So your risk to reward ratio is quite good. You know, you can get out on a close below the 200-day and your reward could be a continuation higher for this uptrend. Another one I'm seeing with a really hard throwback to support is Citrix Systems. And this is, you know, the cloud computing stock. It's part of Sky, the cloud computing ETF. And there we can see a lot of support. So, you know, you had the big advance, you had this kind of triangle consolidation, triangle wedge, and a breakout, and a new high. But then, you know, earnings or something hits, and you get this hard move down. But we're coming into this big support zone, and we're at the 200-day. So this kind of sets up a potential mean reversion opportunity. And there you can see that 5-day moving average of 65-day RSI is in that 49 to 51 area. So at this point, I would wait for some sort of, at this point, when we were right here firming, you had a little break zone to watch. But now that we've fallen back, we can lower that zone. And if we get a move above 139, that would signal maybe that we're turning up and we're ready to resume that uptrend. And I just have a few seconds left here, but the last stock is Waters Corp. And there you can see a breakout and a throwback to the 200-day and firming. And then there's RSI hitting that 50 area. So this one could be poised for a bounce as well. All right, so that concludes this edition of Next Level Charting. If you'd like to learn more about trendinvestorpro.com, please visit the website. Thanks very much for tuning in and have a great day.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.